Good evening, everyone. My name is Natalie Westfall, Vice President of Henry Schein Financial Services. On behalf of our entire team, thank you for tuning into tonight's webinar. Henry Schein has always been a trusted source of valuable information for our customers, but even more so as we navigate our way through the COVID-19 pandemic together. I'm joined by Bob Gray, CPA. Bob is a member of Gray, Pilgrim and Associates, LLC, and a founding member of the Academy of Dental CPAs. Bob will be providing us with an overview of the new COVID-19 economic relief bill that was signed into law on December 27th, with special emphasis on round 2 of the Paycheck Protection Program. We will conclude the session with live Q&A. If you have any questions you would like Bob to cover, please feel free to type them into the chat window. We will address as many questions as possible in our allotted time. Without further ado, I will turn it over to Bob. Good evening, Bob.
Hey, good evening. Thank you, Natalie. Thank you, Henry Schein. And thanks for joining us all tonight or afternoon, wherever you are in the US of A. We're going to definitely leave some time for questions because I'm going to cover a lot of information tonight. And there's a lot of things that are very confusing about some of these new tax rules. So well, I guess without further ado, let me just sort of jump in here. Of course, the attorneys always want to make you say that we're not offering any exact tax advice. This is just edification for you and you need to talk to your own accountant. So with that out of the way, I thought I'd start by trying to find something good about 2020. I had to really stretch to try to find it, but it occurred to me that, yeah, I guess it is true that if you're a teenager in braces, maybe this is a great time to be wearing a mask, right? Other than that, not a lot of great things, and we're happy to see this one go. Goodbye, 2020. I'm going to staple that file folder shut and put it in the back of the drawer and be happy not to open that one anymore. I am Bob Gray. I am a member of the Academy of Dental CPAs. I'm also an instructor of the business of dentistry for the ADCPA and also at Schein's Dental Business Institute, which I'm sure is how I got invited to be able to do this. But I've been passionate about helping dentists be better entrepreneurs for my entire career. I also am a wine enthusiast. My wife and I love to go to Napa and chase around those 100-point wines and see what we can find. And I'm a certified horsepower and adrenaline junkie. That is a Cadillac that has been modified to a little over 900 horsepower, top speed of 240. So some accountants are crazier than others. I don't know if anybody of you ever heard of the ADCPA. I hope we're not the best kept secret in the planet. The ADCPA has members all around the United States. So if you need help, just go to adcpa.org and you can find someone who's got dental specific knowledge about your practice in the ADCPA. I always tell clients that if you're a general practitioner and you're dealing with car dealerships and beauty shops and then the dentist, it's very difficult to help them maximize their practice and really truly be a consultant as well. And if your accountant can't point to tooth number 8, find one who can, because members of the ADCPA are there to help. Let me just jump right in by starting with the stimulus checks. I know this is just a quick overview, but everyone was entitled to $600 for adults with income under $75,000. And that would have been also married couples then up to $150,000 and $600 for each child. I bring this up because you can also check your status of your stimulus payments at the irs.gov. But I've heard so many people say that there were problems with the checks. I didn't get my check. I didn't get the right amount. I didn't get it at all. Maybe I got round 1, but I didn't get round 2. How in the world can I fix the problem? What am I going to do to get my money? And I would tell you the IRS has created a solution for that. When you file your 2020 1040, this new line 30 that you can see here, it's called Recovery Rebate Credit. And on that line, if you follow the instructions, it'll basically tell you that if, in fact, you got the wrong amount, you didn't get the total amount, whatever the problem may be, either for round 1 or round 2, you have the opportunity on your actual 2020 tax return to fix the problem, apply for the credit, and basically take it as if it were a tax payment that you made. That way you can get a refund of that amount on your income tax return if you did not get your stimulus check. So that'll be the court of last resort and the way to solve that problem for any of you. Let me really jump into one of the most important things here of the entire evening. I put a big Christmas present on this because, boy, this was something that we were really not certain was going to happen. Let me tell you that when the PPP1 loans came out, the IRS very quickly announced that they were taking the position that if I got a $100,000 PPP loan and I used it to pay payroll, that the $100,000 of payroll was not going to be tax deductible. And the PPP loan was not going to be taxable. But if you take away all my deductions, it's the same effect. It's the same thing as basically saying, I don't get to deduct it. And while I understand, the precedent that says, listen, if the government paid for the payroll, why should you get to take a tax deduction? The deal was, though, that it was not what Congress intended. When Congress wrote the original bill back in March, they made comments about there that they intended it to be tax-free. What happened in this most recent legislation is they came back and actually wrote into the act itself that the Treasury Department, the IRS, had to respect this as completely tax-free income, meaning that you could also tax deduct the expenses that money was spent on. What a gift, because if you got a $100,000 PPP loan, this is truly $100,000. If you had had to pay taxes on it, obviously it would have been reduced tremendously. So this is something that I think every business owner who gets a PPP loan is going to be thrilled about. And I would tell you that it's the same for PPP1 and the new rounds here. The tax treatment is going to be exactly the same. So rejoice if you have a PPP loan, because the forgiveness of this loan is not going to create any hardship on you and not going to lower your tax deductions. That's a big deal. I would tell you the only Grinch part of this little Christmas gift, though, is that not all states conform to the rules. Many states have their own rules, if you know what I mean. They basically say we don't all automatically follow what the IRS does. And they have to actually have your state pass a rule to say, yes, we do or don't conform. Some of them have already announced that we just don't. And there's a few listed there, but again, just check to make sure that your state is one. And a lot of these states are actually passing rules as we speak to decide whether they're going to conform or not. So the information is not all out there, but that's the only Grinch part of that. One of the other important retroactive changes was the idle advance and the taxation for that. If you were eligible for an idle advance, you got $1,000 per employee, up to $10,000 max. And originally, the idea was that if you got a PPP loan, the amount of the PPP loan forgiveness was going to be reduced by the amount of this idle advance. So for instance, if I had a $100,000 PPP loan and I got a $10,000 idle advance, I would only be able to have $90,000 of my PPP loan forgiven under the original rules, again, back in round one in March. Congress came back and changed that and said, no, this idle advance is truly a gift. It does not reduce PPP. It's in addition to the PPP loan forgiveness. And so in my example, the full $100,000 could have been forgiven under the new rules. And that is retroactive back to PPP1. And again, it has the exact same tax treatment in that if you got the money, it's tax-free. And what you spent that money on, if it was for business, is tax deductible. So again, a wonderful Christmas gift from Congress and then the new act. I want to talk a little bit about the PPP loan one, though, because part of this new act is that the PPP loan one was reinstated for anybody that missed round one. I had talked to a lot of people who either got the wrong amount or didn't apply at all, or they drugged their feet and it was too late. They had problems with banks, whatever the issue may be. I've also talked to some dentists who said, well, I'm just a Schedule C filer. I'm a sole proprietor. And when I filled out PPP1, I used my payroll, my W-2s, to calculate the amount that I was eligible for, but I didn't know I could be there because I thought it had to be only employees. And so they underfunded PPP1. Well, what Congress said in this new round is that you can go back and repair any old problems in PPP1. If you're underfunded, if you didn't get funded, whatever the reason was, now you can actually go back and apply for that and correct that if you didn't get the right amount of money the first time. So that's huge, especially for some people who might not meet the criterion for PPP2. We'll talk about that a little bit more coming up here in a few minutes. For PPP2, there was $284 billion allocated to this loan amount. PPP1 was $349 billion, but they didn't spend all the money. But I would tell you that I think this $284 billion is going to go faster. First of all, that restaurants and the hospitality industry was entitled now to higher loans than they were before. And so that's going to burn up some money. And I think that most savvy businesses are going to say, hey, if I missed out on round one, I for sure want to get in on round two. So you're going to need to really make sure that you jump on this, because it's going to be on a first come, first served basis. And they've said March 31st or until the money runs out. That's when this program ends. So again, there's no real benefit to dragging your feet on this one. You definitely want to get in the queue so that you'll be eligible for the second round of PPP loans. Just as in the first round, they're available to virtually every kind of business. So, I mean, any dental practice would be eligible for something like this. The only thing they really added in this new legislation was certain small organizations. You can see at the bottom, a 501c6 is like a chamber of commerce, something like that that's eligible. But for the most part, think of it as, hey, if I was eligible for round one, I'm not eligible for round two as far as any entities go. That's not going to be, any hold you back on PPP2. But here are the criteria. You really have to fully utilize PPP1 money. All that initial draw has to be done or expected before the loan is dispersed. Now, since you only had 24 weeks after the date you received the loan, I think that everyone's going to qualify for this. This is kind of a layup. So this should not be a problem. And again, if you spent the money, almost all clients that I have talked to have easily spent the money, because remember that you only got 10 weeks of payroll by 2.5 months, and then you had 24 weeks to spend it. So for the vast majority of dentists, it was pretty easy to get forgiveness on the PPP1 and use up all the money already. In the old program, you could have up to 500 employees. Under PPP2, they limited to 300 employees. They're trying to drive it down into smaller businesses than the ones that were applied for prior to this. And here's the big feature for the PPP2. In order to be eligible, you have to have decreased at least 25% in gross revenue when you compare a quarter in 2020 to a quarter in 2019. So all you need is one quarter to qualify. For the vast majority of you, you probably look at Q2 and go, gosh, we were April, May, and June were tough times. We either were closed, we had difficult time getting patients. We had all kinds of issues that held us back. At that point, 25% for many clients was achieved, and that automatically makes you eligible then for this round. So you just need to go back and look at your financial statements and see and be certain which quarter it is that made you qualify for that 25% reduction in gross revenue. The SBA has not issued guidance. I'm going to assume for purposes of this program that a quarter is a calendar quarter. So January through March, April through June, et cetera. What people have asked is, well, could any 3 months apply? Could it be May, June, July, if that's the case? They really, the SBA will probably publish something before too long on this, but I would think for most of you, if you've experienced a 25% drop, it could have occurred in a natural calendar quarter. It may not be a problem. One of the other things I said, some people have said, well, I don't even have quarterly financials. So one of the automatic tests you could also meet is just having a 25% drop overall in total revenue when you compare 2019 to 2020. You don't have to break it out by quarter if you meet that test. But that's what you have to do to be qualified for this new round of PPP loans. I think a lot of people will, especially a lot of dental practices will. So this is a significant amount of money that we're talking about, and again, a big boost in terms of cash flow, because a lot of people just don't know what's to come, right? Where are we going? What's 2021 going to bring? But we all hope the vaccine is out and much more prolific than it is at this point. But, it's always nice to have money in your war chest, depending on what 2021 will bring. So I think it's great for all practices who qualify. One of the other rules is that you must have been in business on February 15th of 2020. You had to be in business. You didn't have to be in business for all of 2019. Because remember, on your PPP1 loan, you calculated that amount by taking the 2019 payroll, dividing by 12, and multiplying times 2.5. So the question is, well, what if I wasn't in business for all of 2019? How did I qualify? And how I also qualify for this new round of PPP? And the answer is, as long as you were in business by February 15th of 2020, what you would do is take the first quarter then of 2020 and compare it to the second, third, and fourth quarters of 2020. And that way you could see if you did qualify for that 25% drop in any of those time periods. If you did, what you would do with your eligible amount would be taking your payroll just for that month of January and February, dividing that by 2, and then multiplying it times 2.5. That would be the amount, rather than taking 2019 payroll divided by 12. You would just take those 2 months in 2020 and do it that way. And even sole proprietors, self-employed doctors, can just do an interim Schedule C, do a financial statement that covers the period January 1 to the end of February 2020. Then look at that and to see what you would qualify for when you extrapolate, again, divided by 2 times 2.5, with a maximum of $100,000 for the owners. So that's how they addressed people who had that, I'm in business, but I wasn't in business for the whole time. This has come up quite often too. What about the question about a change in ownership? So the rule is that prior owner of the practice had to be in business again on February 15th. But now the new owner is actually eligible as long as they maintain operations. So let me give you an example. Let's say that I was in operation February 15th of 2020, but I sold my practice on June 1st of 2020. I did not apply for a PPP1 loan. I knew I was selling, and the new owners took over. Well, technically, it's a new federal ID number. It's a new entity. It could be a complete asset sale. But as long as that new owner took over the operations and continued the practice, they would actually rely on the historical payroll of the seller. You would go back and get the information from the seller and look at the 2019 payroll, again, divided by 12 times 2.5, and that's the amount of money that you'd be eligible for. And you'd be eligible for, again, to going backwards to get a PPP1 loan if the prior owner did not. However, if you bought the practice, let's say maybe you bought the practice in September and the prior owner did have a PPP1, then you're not eligible for a 1, but you are eligible for a 2 if you qualify under the other programs where you have 25% reduction in a quarter. You would be looking back also at the prior seller's quarterly financials in 2019 and comparing it to your new financials in 2020. So it's a little confusing when you have a practice sale, but I think if you continued the practice, you're going to wind up being eligible if you meet those criteria. So how much can I get, right? It's the same calculation as it was for PPP1, except you're allowed to pick one of 3 methods for the actual time period on this calculation. You can take the original 2019, that's choice 1. Just take calendar 2019 and apply for the exact same amount that you applied for in PPP1. The other choice, though, is to take calendar year 2020. And I know there may be a few of you who said, well, gosh, yeah, I did. I expanded. And once we got back in from maybe June or July on, I maybe hired an associate. I maybe grew the practice. I may have had more payroll in 2020 than I did in 2019. If that's the case, you can use that year divided by 12 times 2.5. And the third option is just to take the fiscal year that starts on the day that you actually got your loan. So let's say you got your loan on February 1 coming up here of 2021. You'd be able to take January of 2021 and then the last 11 months of 2020, add that as a year divided by 12 times 2.5, and that would be the amount that you'd actually be eligible for. So it's your choice. You get to pick the biggest of the three. Whatever yields you the highest PPP loan is the option for your time period. So what counts as payroll costs? PPP1 and PPP2 are almost exactly the same on all these first bullets. It's all the things you would think of as a typical W-2, salaries, bonuses, commissions, whatever else. There's also included the employer cost for health insurance. Now, that's not anything that would be deducted from an employee's pay if they're participating in the cost of the premiums. It's just the part the practice pays for health insurance. It also includes retirement benefits that the practice pays. Again, not a 401k amount that's deducted from an employee voluntarily, only the practice matching part or the voluntary part the practice would pay. And state unemployment taxes thrown in there as well. The one new thing under this second legislation is they redefined employee benefits, not just to include health insurance, but to also include life, disability, vision, dental insurance. All those benefits can be included in payroll costs. So you would add all of that up, then divide by 12 times 2.5, and that's how you do that calculation. So what doesn't count? I get that question from time to time. Well, by statute, anything paid to any employee, whether you're an owner or not, in excess of $100,000 doesn't count. That has to be just ignored above $100,000. 1099 contractors, if you have a subcontractor, associate dentist, or someone they do not qualify as payroll because they're actually eligible to get a PPP loan on their own. As a self-employed business person, they can get theirs. They're not part of your payroll or your calculation for a PPP loan. Qualified sick leave that you already got a credit for, we're going to talk about that a lot more in detail coming up, but you can't do the same payroll twice. So I can't count payroll for PPP and payroll that I already got a tax credit for. And then anybody who's not really a principal residence in the United States does not qualify. How do I qualify for forgiveness? Now, this is a huge issue. We're going to talk a lot about this. I got a couple of things to discuss relating to forgiveness. But the rule is you had to spend at least 60% of the proceeds on qualified payroll expenses. The other 40% could be spent on rent, mortgage interest, utilities, and that was in PPP1. Now, new for 2, they listed all these other items here: covered operations, property damage costs, supplier cost, covered worker protection. We're going to talk about those in just a minute. But one thing I want to point out, the same for PPP1 and 2. If you own your own building and you you're the landlord and you're also the dental practice owner, and you're renting your building back to your dental practice entity, you can only deduct the part of the rent that covers mortgage interest. You cannot deduct the entire rent that you paid. So think about it. If I have a building and I'm lucky enough to have the building paid off, 0 of my rent could be used for this calculation. So keep that in mind for, again, if you're the doctor who owns the practice and you own the building, you're not going to be eligible for that up until only to the amount of mortgage interest that you actually paid as the landlord is the amount of rent that could be deducted. On these new eligible costs that we just talked about, let me tell you, I think they basically tried to say, well, let me just let you have everything. Because if you look at how broad the language is here, it's hard to imagine what expenses wouldn't be tax deductible. They talk about PPE in the very beginning, the covered damage costs. I mean, if there were any damage you suffered because of the rioting and the unrest last year, those expenses could be covered. But the key one here is the expenditures that are to suppliers that are essential at the time of purchase. Well, boy, that just drags in everything. How many people spend money on things that they didn't really need or weren't essential to the practice? So it's, it would be a pretty long list of things that you could drag in to cover that 40%. And I would tell you that I'm going to include the fact, or I want to talk about the fact that that 40% now may be more important than ever. When we first talked about this with our clients, we said, hey, listen, you had 24 weeks to spend 10 weeks of payroll. Make the forgiveness application simple. Just use a payroll report because you had plenty of payroll to cover it. Because of these changes in this rule, that may not be true anymore. So if you have not applied for forgiveness for your PPP1 loan, you may want to stop and think about how this calculation goes. And I'm going to show you a lot more about that coming up. One other question that has popped up, this was actually on PPP1 and PPP2 applications. There's a statement that you're initialing that says, current economic uncertainty makes this loan request necessary to support the ongoing operations. So clients have said to me, well, Bob, gosh, we were hurting in April and May, maybe June last year. But boy, I'm back on fire. Things are great. I may be back better than ever. How am I going to support that statement? If I don't really need the money and the practice is doing really well, how can I initial that? And the only thing I would tell you is that back in PPP1, when this issue popped up, because people said, well, gosh, what if I have plenty of money? Maybe I've been lucky enough to invest well, and I could live without this PPP money. The Treasury Department came back with this statement that you can see there. If anything is any loan less than $2 million will immediately be deemed to have basically automatically met the requirement for certification of need in good faith. So the smaller loans were just automatically sort of safe harbored in. If you'll see at the bottom there, the SBA admitted that this approach is going to enable them to conserve its finite audit resources and focus on larger loans. So basically they're saying, listen, we wouldn't have the ability to audit anything less than $2 million anyway. So we're just going to say, hey, you're in, you meet the safe harbor if you're in. So I'll let you go back on a moral decision and decide whether or not you think you need the money, if you need the money or the government handout. But I just want you to realize that Treasury announcement offers that safe harbor for smaller loans. And the first PPP loans could have been up to $10 million. So that was a problem for the ones that were greater. The second round of PPP loans is limited to $2 million per borrower. So basically every PPP2 loan is going to be certified under this safe harbor. The other thing that they did in this last round of legislation was announce that the forgiveness for loans under $150,000 was going to be a one-page form. Can I get a hallelujah? Because let me tell you, the PPP forgiveness applications, when they first came out, would have been 20, 30 pages of questions and full-time equivalent employees and exactly when did I make the payroll and how and when and on and on and on. What they admitted was like, look, we know there's been enough damage to businesses in the United States. If you got 150,000 or less, we're going to assume you needed it. The only thing we're really asking you to do is certify that you really did spend the money on qualified payroll. This is huge because if you remember in the original PPP1, they had, you had to certify that you had brought back all your full-time equivalent employees either by the end of your cover period or by December 31st. This eliminates all that. This is just you saying, hey, I promise I spent the money the way I was supposed to. So good for them. What do I do now? I mean, I think you need to just go back and look at your quarterly payroll and your quarterly financial statements, find a quarter in which you're 25% down to see if you qualify for PPP2. If you really do need the money and you're going to do that, remember, you don't have to certify. But I would say act quickly. I really can't emphasize enough that I believe this money will run out. It's not going to be available come March 31st. So you need to jump on this. Let me talk about one other topic here quickly, the new EIDL grants. If you remember back in 2020, the SBA issued these EIDL advances. It was $1,000 per employee up to $10,000. But what happened is that fund got exhausted quickly and many, many businesses never got their EIDL advance. So what they did in this next round is they jacked it up and put another $40 billion into the kitty for these EIDL advances. So this is your opportunity now to actually correct this deficiency. I would tell you that the SBA originally announced that today they would have their website back open to apply for these EIDL advances. When I checked later this morning, it was still saying no, they're not ready. So check in a day or two. But if you did not get the EIDL grant in round one, or you got the wrong amount, you had 10 employees, but you only got 5,000 for whatever reason, this is your chance to go back and fix the EIDL grant, the first round of EIDL grants and advances. There's a new round available under this new legislation, though. It's aimed at low-income communities, and you must have suffered at least a 30% economic loss in revenue for any 8-week period between March 2nd and December 17th of 21 going forward. And you can't have more than 300 people. If you go to that data.gov, you'll see that you can put in your zip code and you can see where the low-income communities are. I would tell you, when you look around the United States, though, I just picked one little screenshot here of the East Coast, and you can see there's a lot of red on that. So don't hesitate to go to that website and make sure, because if you're eligible for another $10,000 in second round EIDL grants, remember, again, it's completely tax-free money. So, all the money helps sometimes when things are tough. Let me switch gears and talk about the sick pay and family leave tax credit. Let me tell you, this was nothing that we talked anything about going back into round one, because here's the problem. If you got a PPP loan under the rules that they existed back in March, you were not eligible for this tax credit. Well, the vast majority of people got, the PPP loan. So you could just ignore this and didn't really think about it. But now they came back on the second legislation and said retroactively, going back to 2020, if in fact you had paid someone to be home on up to 80 hours of sick leave because they were either subject to a quarantine order, advised to self-quarantine, or experiencing COVID symptoms, you can actually get 100% of the money back that you paid them, up to $511 a day or $5,110 for that 80 hours. Now, it's only once per employee. So even though they extended this into 2021 now, you can't get it for 2020 and 2021. It is $5,110 per employee. But again, that could be a huge refund if you have a number of people that you paid while they're out. On the family leave side, workers could receive up to 80 hours of paid leave, again, at 2/3 the regular rate. And this is if someone was caring for someone who was subject to the quarantine. If you had a child whose school was closed, or the child care provider was unavailable, and I couldn't come to work, I had to stay home, and I got paid. In order to do that, I may have used up vacation pay or other pay. Again, retroactively, you're going to be able to go back for those people who you paid and potentially file amended returns to get 100% of that pay back. So that is an enormous retroactive change, and really sort of forces you to go back and look at your 2020 payroll very carefully. I think many people don't realize too that this sick leave, if you can see is available for self-employed people when you file your tax return. If you can see in that little, I collapsed this form, but part one, where it says credit for sick leave for self-employed individuals, that's where you would say, hey, listen, I own the practice, but I was sick. I couldn't, come to work. And you'd be eligible to get money under that. Or part two is, I was unable to work and I own the practice because I was caring for someone and had to stay home. So it's available for self-employed people. It's not just W-2 employees. One of the other things that's retroactive, and it's huge, is the employer retention credit. Let me say again that this is something we really never talked about in the months gone by, because if you had a PPP loan, originally you were also ineligible for this credit. But that new legislation went back and changed that so that you can actually go back and take this credit too, which could be a really enormous difference. Now, remember that you cannot use the same dollars for payroll for PPP loan forgiveness and for any of these credits. That's why I said it might make a huge difference on how you apply for forgiveness. Because if I only used 60% of my PPP money for payroll and left all the rest of the payroll dollars available for these credits, I may have actually been able to help maximize the money and the refunds I would be eligible for. So if possible, you want to try to use that 40% on loan forgiveness to, again, keep the rest of that money eligible. Another big thing is that this employer retention credit takes priority. So it's dollars paid for this go first as compared to the PPP money. And I'm going to show you an example on that coming up here. And again, in order to be eligible, you had to have one of two things. You either had to be an operation that was fully or partially suspended because of governmental order. And again, a stay-at-home order, well, there were plenty of those floating around in different states. And so many practices will be eligible for that. The other criterion is that gross receipts are less than 80%, or in other words, a 20% decline in 2021 coming forward as compared to 2019. So if the first quarter of 2021 is still 20% lower than the first quarter of 2019, you qualify this year. Going backwards, the 2020 test is a 50% drop in any one quarter. So it was either, to qualify for this, you're either lost revenue or were shut down. And again, so a lot of people are going to qualify for this particular retention credit. The qualifying wages are anything paid between March 13th and now extended to June 30th of 2021. So again, if you were down 20% in the first quarter of 2021, you would qualify for wages going forward. But if you do qualify under the shutdown test, it's only wages paid during that period that really count. If you qualify because of the 50 or 20% drop, then that's the quarter when it starts. So let's say that you were down 50% in the second quarter of 2020. And then you came along in July, August, and September, and you were still down 50%. All the wages paid in that quarter qualified. But come the fourth quarter, you were back up and you exceeded 80%. In other words, you were back to 81% of your 2019 revenue. That's the quarter in which it would stop. And so second quarter, third quarter in my example, but not the fourth. That's how you do it on the time period if you're qualifying because of the revenue drop. If it's because of the shutdown, you're, again, just stuck with that particular time period. And the tax credit's 50% of the 2020 wages up to $5,000 per employee. The new law is 70% of wages up to $10,000 per quarter with a maximum of $7,000 per employee. That's $14,000 for the 2 quarters, you put them together. And if you applied back in 2020 and were qualified, you'd also get $5,000. That's $19,000 you could potentially be eligible for per employee if you qualified under every one of those criteria. I mean, I'm talking about a lot of money. I'm going to show you an example coming up. The IRS has said they're going to issue guidance on exactly how to claim the retroactive credit. It's probably going to be amended payroll tax reports, but it could be a separate tax form. And they're also going to issue guidance on how to get advance payments if you need them for 2021. So they're going to, again, give you dollars in advance. So if you say, I'm probably going to need the money and probably qualify. Let me just show you a quick example here because I want to show you the magnitude of what we're talking about here. Here's a practice that has 5 employees. If you can see across the top here, we've got 5 people. I just randomly picked some payroll dollars up there to give you an example. But this practice would have been eligible for a $62,500 PPP1. They would also be eligible for that same thing for PPP2. And under the original CARES Act, if you see the big red arrow, they would have been eligible for 0 employer tax retention credit. So that would have been, again, 0. Now look what happens if they qualified. If they had a 50% drop in 2020, if they had a 20% drop in 2021 going forward, look at the amount of money just 5 employees generate in this retention credit. And this is, again, you'll see the yellow line here. This is if 0 of the other expenses other than payroll are used for forgiveness. In other words, all of payroll was used when we requested forgiveness. But in addition to the $125,000 I got in these 2 rounds of PPP loans, I get another $77,500 back. But look what happens if I switch and I only use 40%. I used 40% and used 60% for PPP loan forgiveness. And I maximized my payroll that was left over that could apply to this retention credit. If I meet all that other criteria, I went to $84,500. So you can see that a little bit of planning, I think, is going to go a long way and really be important as far as trying to make sure that when you do these loan applications for forgiveness, that you're using the calculation and using the expenses that best suit your particular practice to maximize the potential under these other credits. Because I know that a number of people that are listening to this program tonight are going to look back and go, well, geez, that applies to me. You know, if I now knew that I was eligible for 2020, I'm going to go back and file for some credits for this retention credit. And again, remember, the Congress did this in order to encourage you to continue to have jobs for people during the pandemic. So if you're trying to keep the practice running, you're doing all the right things, you're eligible for this credit, again, if you meet the obvious criterion with the 20% drop or the 50% drop. But it's any one quarter. And there may be many of you that had a 50% drop in one quarter if you were shut down during any part of the pandemic. So I think a lot of practices are going to qualify for some enormous refunds under these retention credits. So keep this in mind when you're looking back at your 2020 payroll, and get with your advisor to talk about how you can sort of reap the benefits of some of these retroactive now tax credits. Let me show you just another quick example. I just do a little bit larger practice, 1 doctor and 7 staff members. And here was the calculation again. You run it, it's $120,000 in tax credits. I mean, for many clients, this is going to be an enormous, and let me just keep saying enormous amount of money that they're going to be looking back to and saying, well, gosh, I want to make sure that I maximized my opportunity under this new tax rules to go backwards and take these credits. So again, be aware that this is going to be available coming up here very, very soon. The IRS is going to issue guidance on how to collect these refunds. Remember, this is really, really key. This employer retention credit takes priority over the PPP. So let me give this example here. Let's say you received your PPP loan money on May 1st, and your practice was shut down for the month of May. You got 10 employees that you paid an average, and I just selected $4,000 a month. Then you actually, for that month, would have $40,000 of eligible employer retention credit payroll, and would get a $20,000 refund for that 1 month. And remember, I said you already had your PPP loan. But here's the deal, because this ERC takes credit, all it does is put the brakes on the PPP loan forgiveness. Even though the period started May 1, you had 24 weeks from May 1 from the time you got your loan. But again, remember, you only got 10 weeks of payroll that you applied for. You had 24 weeks to spend it. So now in my example, this first 4 weeks of May don't count towards PPP loan forgiveness. But you got a $20,000 refund because of it. Now your forgiveness periods, although it started in May 1st, the first 4 weeks are blocked out because you can't use the same payroll dollars twice. But now you still have 20 weeks left to spend 10 weeks of payroll. So as soon as that PPP money was spent, again, you could then later on in the year of 2020 have had payroll that qualified for this credit. So of the two, I mean, maybe many of you had some, paid family leave or sick leave for someone who was out under the COVID rules, but that's going to really pale in comparison to the potential credits that you could apply for retroactively and also going forward for 2021 under this employer retention. This is going to be for many people almost as big as PPP2. So remember that this is going to be huge as far as looking back for 2020's payroll. We talked about a lot of things tonight, but let me just do a quick review because I want to leave time for questions here at the end. Remember, again, the stimulus check, the way to fix that problem, if you had any errors in round 1 or round 2, is to file a 2020 tax return and make that right. And again, be sure to apply for PPP2 as soon as possible because I think this money's going to run out. The well is going to go dry, and you'll be sorry if you missed out on that. You have an opportunity to fix, again, anything that happened with your EIDL advance, either the wrong amount, no amount for round one, and be sure to make sure you've checked if you're in a low income community and also had your 30% drop in revenue in order to qualify for round two. You could get another duplicate $10,000. And remember, the taxes on that are wonderful because it's zero. So if it's something you're eligible for, I would encourage you to apply. You want to look retroactively back at these sick pay and family leave tax credits, but you really want to make certain you're looking back at the employer retention credits. Now that I can also be eligible in the same year as my PPP loan, I just can't use the same dollars twice, but I might have plenty of dollars in those time periods left in order to be able to take advantage of that credit. And as I said, try to maximize the amount of the PPP loan forgiveness that is expenses other than payroll. That's what's going to help you maximize your employer retention credit. So I know we went through a lot of things here quickly tonight. I've at least 10, 15 minutes here. We can go through some questions. I am certain there are a few people that may have raised their hand. Natalie?
Yes, we have quite a few questions tonight, Bob.
Okay.
The first one is the first PPP loan below $150,000 automatically forgiven, or do they still need to apply for forgiveness?
You still need to apply for forgiveness, but the SBA the new legislation promised that the SBA would have to limit it to one page, where you're basically attesting to the fact that I did spend the money correctly. I no longer have to attest to recreating all my full-time equivalent jobs and all the other things that we're going to go into that first round. But the SBA has not issued that one-page form yet. So, but yes, you do have to apply.
Okay, great. The next question is, what if I received money from the Provider Relief Fund because I'm a Medicaid provider? Can you still apply for PPP2?
Yes, completely independent. Nothing to do with any of the HHS or provider funds. All of those grants are completely separate from these programs that we're talking about now. You can qualify for both.
Okay, and I have another one here that has been coming in from some of our other customers as well. If they were granted a PPP loan during the first round through a bank that's not their normal bank, because I think a lot of banks were overwhelmed in that first PPP, do they need to go back to the same lender for the second round, or is there a reason why they should or shouldn't? Do you have any guidance on that?
There's absolutely no requirement to go back to the same bank as your PPP1. The only benefit, I've talked to a few people that said, oh, my bank kept my information. So when I went back to log in to do my PPP2, they already had my name and address and my federal ID number and some things pre-populated. Other than that, there's absolutely no difference which bank issues the loan.
Great. Another question we have is, if somebody opened a practice in October of 2020, is there anything that they can benefit from regarding PPP?
Yeah, so remember that if the seller practice was in practice on February 15th of 2020, and they then bought that practice and kept operations going, then they would look back to the seller's revenue in 2019 and to see if they qualified. And if in fact that fourth quarter then of 2020 in October going forward, if they in fact suffered a 25% loss as compared to October of 2019 under the seller's practice, then they would qualify.
Great. Also have a few questions about whether you need to count PPP round one proceeds as your part of your income for your PPP round two calculations.
Correct. The PPP money does not get included in actual revenue. So it's only patient revenue that counts towards this actual money. So.
Okay. And someone else was asking if that's collections or production.
It's collections. It's actual deposits that were made during those time periods. Now, for the much larger businesses, I can tell you, if you were such a large practice that you were required to, do your income taxes on the accrual basis, which would be a very, very limited number, it could be what's called adjusted production, which is production minus write-offs for bad debt and insurance, write-offs and that sort of thing. But again, 99.99% of you the answer is collections.
Great. Let's see. One of the questions, we've got quite a few people that are asking about mergers with other practices. So if they already had their own practice, but then maybe merged with another practice, how would they look at PPP round 2?
On mergers, though, the problem is that you can't look at the practice separately anymore. So that, for many people, unfortunately, those mergers will make you ineligible for PPP2 because your revenue for this new entity, this combined entity, is higher than your entity before for either one of the two of you. And they don't let you do the comparison, divided by either way. So that may have made you ineligible. But if for any reason you didn't take advantage of PPP1, that doesn't make you ineligible to do a PPP1 loan and go back and fix that problem now. It just makes you ineligible for 2 because your revenue is probably not 25% less in any one quarter.
Okay, great. Let's see. Gosh, there are a lot of questions out here. If you received an EIDL loan but not a grant, can you still get the grant now?
Yes, the EIDL advance was completely separate from the EIDL loan. So yes, go back and get your up to $10,000 advance if you didn't get it in round 1.
Great. If there was a follow-up question on mergers, can they add, if they acquired another practice, can they add the prior owner's payroll to, or is that still kind of tricky and they should check with?
Yeah, that's going to really be dependent, and a lot of it depends on the ownership ratio. If I owned 100% of the practice before and now I only own 50%, you're not going to be able to do it. If you bought a practice and you just acquired it, it's possibly that you could include their payroll, but that only helps now because of to go back for a PPP1, not for PPP2, because again, your revenue will not have gone down 25% most likely if you merged in and added a practice.
Okay. Another question here. What happens if PPP1 has already been forgiven? Are they eligible for the retention credit?
Yes, they're eligible for the retention credit. It just means that you have to look at the payroll dollars you used on your application for the PPP loan forgiveness, and you cannot use those again. But let's just say you got 100, just pick an example to make the math easy. Let's say you had a $100,000 PPP loan, but when you turned in forgiveness, you showed that in that 24-week period, you had $110,000 of eligible payroll. In that case, that extra $10,000 could be used towards the employer retention credit or towards the Family Leave or Sick Pay Act, because again, that was over and above the amount that was used for the PPP loan forgiveness.
Okay. We are also getting quite a few questions from folks looking for more details on low-income communities. Would you be able to share a link with us, Bob, that we can get out to the participants that might?
Yeah, I can send it with you. It was actually, if you just go to data.gov. So data.gov, there's a listing out there, and there's several websites. If you Google low-income communities, where you can just enter your own zip code and it'll pop up on the map like that one slide that I showed, and you'll see which areas are in red and they qualify.
Okay, great. A question regarding employer retention credits. How are these credits affected by employees who were furloughed or went on unemployment?
So it's only for payroll that you actually paid. The employer credit had to do that. However, remember that for furloughed employees, if you continue to pay their health insurance, that health insurance premium counts as qualified payroll. So if, again, you may have just sent them on unemployment but continued their benefits, that would apply. So you're not counted out completely, but it's you having to issue the actual payroll to qualify for the forgiveness.
Okay. And how do customers apply for the employer retention credit?
Well, the IRS is going to issue guidance. They said, again, this relatively new law, and the IRS is scrambling to go, well, now that you made it retroactive, we don't have the forms, we don't have the systems in place. So stay tuned to this channel for more information.
Okay, great. If I didn't receive the total amount for PPP round 1, can I apply again to get the difference in round 1 and then still be eligible for round 2?
Yes. Now you have to really hustle, because remember that I said that you had to have exhausted your PPP1 loan funds and have them fully dispersed before you're eligible for PPP2. So if you hustle right now and applied for the correct amount of PPP1, got the money, spent it, and the money did not run out yet for PPP2 before March 31st, you could apply again now for PPP2.
Okay, great. This is a great question. My idle advance was deducted from PPP1 loan forgiveness, and the rest was forgiven,
Right.
and they paid the difference. Are they able to claim it back now that the rules have changed a bit?
Yes, the SBA has said contact your bank and go back and tell them I want my money back. And then the bank themselves are going to go back to the SBA, get the money, and forward it on to you. So yes, just contact your banker if you've already applied for forgiveness and we're reduced.
Okay, great. Do you have any guidance for larger practices with more than 300 employees? Do any of these benefits apply to them? Any way for them to really get around the limits there?
Yeah, so the only thing that's not for PPP2, but they did increase it to 500 employees for the employer retention credit in 2021. And so you would possibly qualify depending on your size again in 2021. But you've got to meet those criterion again of having a 20% drop in revenue in 2021 as compared to the same quarter in 2019 to be eligible for these credits. But they are eligible for larger practices at that point.
Okay. And then if people have multiple offices, do you have any guidance for people with multiple locations?
Sure. So the answer is it really depends. If they had to use the affiliated practices rule. So if you own three different, entities, three different corporations and practice in three different locations, you still have to conglomerate all those to figure out what you're eligible for. And that the number of employees do qualify. Again, if you're over the limit because you have too many practices, but otherwise, you would basically just apply individually for all of the entities that you own, all the locations. And there's a question on the questionnaire about what other companies, you tell them which federal ID numbers are also affiliated, and you just, announce that that's true, but you're not using the same payroll dollars twice, and every one of those practices would be eligible for their own PPP loan.
Okay. And if somebody owns a practice, but then also works as an independent contractor in another location, do you have any guidance for that situation?
Sure. So ignore the fact that I'm a W-2 employee in the other practice that just doesn't count towards anything. It is as if just the self-employed income would be what you'd be looking at. So if I had my independent contractor income, look back at 2019, multiply or divide by 12 times 2.5, and that's what I'd be eligible for. Look back and make sure you got your PPP1, or again, if your independent contractor business suffered a 25% loss in any quarter of 2020, then you can also apply for PPP2.
Okay, great. And a follow-up question, if the SBA hasn't given guidance yet on the employer retention credit, should they still apply for PPP2 now?
Yes, because they're completely independent. And I would say that for certain, since the credit is only $7,000 per employee, that's the maximum per quarter that you could, and that is only if you have that 20% reduction in 2021. So for many practices that have recovered, it may be more difficult in 2021 to actually be eligible for that credit. Whereas all you had to have was a 25% reduction in any quarter in 2020 to be eligible for the PPP2. So that would be the bird in hand. That'd be the one that'd be easier for most practices to qualify for and be sure they got the maximum money. So yes, I would definitely qualify. If you qualify, apply for PPP2. Okay.
And the first PPP lender hasn't started to take applications in round 2 yet. Should our customers be thinking about going to different lenders in order to get into that first come, first serve window? Or do you think you have any thoughts on that?
Yeah, I mean, I would say that many of our clients scrambled and wound up going to alternate lenders. I mean, gosh, there's all sorts of places you can go to get these loans. PayPal, for instance, was even issuing this, but a lot of alternate lenders. So I would say, yes, if your bank is really that far behind, now, again, if it's a day or two, if they're ready tomorrow or Thursday, I don't know that we're not going to run out of money by Friday. But if it's into the end of this week and you're not hearing anything from your bank, it may be time to shop for a bank.
Okay. Can you touch on again, we have a few people asking about how independent contractors apply for the
Sure. So
loan?
independent contractors would just go back and look at their Schedule C for 2019 on their tax return. And that on that Schedule C, whatever that net income is, you would divide that by 12, multiply it times 2.5, and that's what you're eligible for PPP1. And again, if you had a 25% reduction in 2020 in any quarter, you could apply for the same amount in PPP2.
Okay, great. And one of the other things that I do know that a lot of the lenders that did PPP round 1 have automated round 2. So it should be easier for those of you that work with your banks. It should be a little bit easier to get round 2.
Well, we all.
Yeah, hopefully. And then there seems to be some questions on whether there's deadlines for the forgiveness applications.
Yes. So for both of these loans, you had either 8 or 24 weeks that you could pick as your covered period. And that started with the day your loan was funded. So from the date the money was deposited, if you picked 8 or 24, that's choice number 1. Then from the end of that covered period, whether it was 8 or 24, you have 10 months to apply for forgiveness. So for those of you who applied in, let's say, May, and your 24-week period is ending up in September, you have 10 months from September of 2020 to apply for forgiveness. So there's still plenty of time for the vast majority of you.
Okay. And we do seem to have kind of a common thread here with dentists who are employees but want to know what they need to do to be able to claim their own salary, or how much of their salary they can claim in PPP calculations.
Yeah, unfortunately, if you're a W-2 employee and you don't own the practice, the answer is you're out of luck, because it was only intended for employers to try to retain employees and try to help the employers, not the employees. So those employed associate dentists are sort of out of luck, but their host practice in theory was the one that was supposed to get the benefit.
Okay. And owner dentists, can they take their salary in their calculation?
If I own my own practice, but I'm an S corporation or a C corp, and I actually take paychecks from mine, then my payroll up to $100,000 was for 2019 was eligible, and that would make me eligible for $20,833 in PPP1 and $20,833 in PPP2 when you do the math.
Okay, great. Well, we still have a lot of unanswered questions, and I know as we're looking through them, there are definitely a lot of common themes. So what we will be doing, like we've done in prior webinars, is trying to consolidate them into themes and publish a frequently asked questions document that we can send along with a copy of the webinar to our participants. Do you have any closing thoughts for our team, our customers tonight, Bob?
No, all I can say is I have my email address up here. I will, cry foul if too many people ask really, really hard, difficult questions that take me forever. But, I'll try to answer as many questions as I can for people that want to reach out to me. We're here. Reach out, go to 80cpa.org and find a dental CPA that's near you if you need some help with all these things. So we're here to help.
Great. Well, we greatly appreciate this. This concludes our webinar. I'd like to thank Bob for his time and valuable insights on these important topics. As you can see, there's a lot of information to consider. We hope you found it to be helpful. And a link to the recording will be sent to all registered participants later this week. So we look forward to sending that out to you. Thank you for joining us, and have a great evening.
Thank you, Natalie.